It's Rick with your market wrap for Friday, October the 7th. Happy Thanksgiving weekend for all my Canadian friends and family. Starting with our risk model, a little bit of smattering of green we had yesterday, the day before. It's gone. Today's action basically took care of all of that. So let's get right to the charts. Where are we here? S&P, as you can see from the indexes here, small caps down 3%, mid caps down 2.5%. The Qs were down almost 4%, spiders down 2.8%, and even the Canadian was down 2%. So not a great day. These charts all look pretty much the same. If I look at the weekly chart here, I'm going to expand this out just a touch. Looking at some of these individual bars here, we had that run up in August that took us over the 40-week moving average, and then it came back down. And then we had the promising week here. We opened here, and we had what's called a good closing week. It closed right near the high, which gave some promise. The next week started above there and then quickly just flushed. And that's closed down here. These little squiggles, I think I explained in a previous video. That's where the price closed for the week, right near the bottom, which is not a good sign. Following week, right, not at the bottom, but close to it, not a good sign. Last week, right at the bottom, not a good sign. But then we had a bit of a surprise, and we rallied for a couple of days. But guess what? Today took care of all of that, and we closed again, right, not at the low, but pretty close to it. So just not good action. If I expand this out again, we're within this range that I drew out here a couple of days ago. But we've yet to take out this low here from last week. So we'll see what happens next week. So that's that. I thought I would share with you my statistics. I'm a statistic junkie, but anybody that is doing any amount of trading, more than 2 or 3 trades a month, really should be keeping track of your stats so that you can see where your weaknesses are and work on improvement. So just to quickly review these, in September, I took 37. I initiated 37 trades. Again, this is a big fault of mine. I'm an action junkie, I guess. I just take way too many trades. I can't seem to sit on the sidelines as well as I should. So something I need to work on. Pardon me. So out of those 37, 11 were winners, 17 were losers, and 9 were break even or scratch trades. I define break even as plus or minus less than $50. Then I call it a break even trade. So my batting average was 39% for the month, and this is consistently where I've been all year, right in this zone right here. And that's really a result of taking too many trades. So I keep saying this every month. I got to work on this. One of these days I'm going to get it. The average dollar win was $1,281, which means nothing, but you have to compare that to your average dollar loss, which in my case here was 807. So then you calculate your win-lose ratio of 1.6. My desired ratio is 2.5. So I like to keep these winners 2.5 times bigger than the losers. I would have been pretty close this month. I had 2 of my losers. One was a little over $4,000 and another was 3,000 and change because of gap downs. So ignoring those 2, we can ignore them, but this ratio would have been better. I also kept the average risk per trade in dollar terms is $522. And this is really small. This represents 0.2% of my entire trading account. And the whole premise here is you want to trade small when things are not going well. And so I have not been trading with any large size or risk for probably 5 or 6 months now. when things get good, when we're in a bull market, you'll see that my average risk per trade will be 4 to 5 times bigger than this. So the whole premise is when things are not going well, when the market is not performing as it should, you trade small. And then when things do turn, you get aggressive. And that's how you make big money. So we just have to be patient and wait for what Minervini calls the easy dollar environment. And this is a disturbing stat for this month. My average loss was 807 and my average risk was only 522. This loss should never exceed the average risk per trade. And again, this is totally a result of 2 trades that I got caught in a gap down, and not much you can do about those. I also calculate my gains and losses in percentage terms, because really the dollar amounts are meaningless. If you're everybody's got different account size and tolerance for risk. So, I'm sharing this for full transparency, but really the important stat is right here in the percentages. So my average gain was 4.3, average loss was 2.2. So my win-loss ratio was almost 2. Still not quite where I want it to be. I say 2.5 is my target, but not bad. And my average risk per trade is 2%. So I'm going to do a whole tutorial on risk management and position sizing. But if I'm willing to risk 2% on any one trade, and I put, say, 20% of my account into that trade, the total portfolio risk is really only less than half of 1%. So, and that's where I want to keep it. I want to keep my total risk to my damage to my portfolio certainly under 1% is my goal. I did show a slight profit. It was not even enough to measure in percentage terms. But the benchmark that I compare myself to is the S&P, and it was down almost 10% for the month. So a break-even month against a 10%, almost 10% loss in the S&P. All in all, it didn't make any money, but still keeps me in the game. So that's that. Current trades. Still in AR. Well, I just entered ARLP. It's done nothing wrong. Great weekly. So I'm not sure where I was before the phone went. But anyway, ARLP doing nothing wrong. It's pulled back a little bit today, but nothing like the major averages. But so it's getting a little closer to my entry. I took an entry in FSLR today, or yesterday it was, sorry. This is the reason that I'm trading too much. I was looking at an intraday chart, looking for a downtrend line break on a very strong stock, looking for a bounce, didn't get it. Tight stop, stopped out, so put 1 in the loss column. HQY, again, I got that yesterday on this what appears to be a false breakout. The only saving grace in this one, it hasn't hit my stop. My stop's right here at 66.08. And it had a strong close. So it came down and then finished strong, whereas the market finished weak today. So I got my fingers crossed for Monday, but no big hopes for that one either. UNM was a new position today. I took anticipatory entry just before it went above the all-time high here, and then had added onto it when it broke the all-time high at 41.50. And so it's performing well, or at least for the first day at least. Another one performing well is another new position today, NOC. So entered this one today. Anyway, it's not going to show it. Down here on the break of this, I aim at 485 and change, and we closed at 496. This one, if it clears this area here, There's very little supply. There's just this one day when it actually closed above all of this previous resistance area. So this is one, if it breaks through there, especially in a tough day in the market today, I can imagine where this would have gone had the market been stronger. Has high potential. But to be safe, because I'm a bit of a chicken, I did take 25% of my position off right at 495.80, right at 496, basically. And I'll probably, if it takes out this, I'll probably add it back and maybe even more and increase my position size on this one. And then VRTX, again, is a strong one. Another trade I should not have taken today. I took a pretty big position with extremely tight stop. It either worked or it didn't work, and the latter. So I got stopped out for a tiny loss, relatively tiny, like 0.2% of my account. So it's those kinds of trades that I need to avoid doing if I'm going to get my batting average to where it should be. So that's it. Like I say, I'm still working on that tutorial for position sizing and risk management. And another thing I was thinking about doing is, I won't do it today because this video is already more than probably 10 minutes. I haven't been keeping track. Is I keep track of all my trades, and I also keep the charts. And it's useful after a month, 2 months, you can go back, pardon me, and review your trades, show your entry points, your exit points, and what would have happened. And I may do a quick 5 or 10 minutes reviewing some of my last month's trades in a future video. So that's it. Again, have a happy gobble gobble weekend, and hope for a better week next week.